What just happened in Washington today will directly impact your crypto portfolio, and most people are going to miss it entirely. Today was not a normal day in DC. Multiple hearings, multiple officials, multiple moments that individually would have been big news, but together paint a picture that every single crypto investor needs to understand before markets open tomorrow. Stay with me through this whole video because the last story I'm covering may be the most bullish thing said in a government building in years. Let's start at the top. Kevin Warsh is President Trump's choice to replace Jerome Powell as chair of the Federal Reserve. That's the most powerful financial position in the United States, arguably in the world. The Fed chair controls interest rates, monetary policy, and has enormous influence over the direction of the entire global economy. Today, Warsh sat in front of the Senate for his confirmation hearing, and what unfolded was fascinating. The very first question about crypto was simple. Should digital assets be incorporated into the American financial system, giving people new investment opportunities and real consumer protections? Warsh didn't pause, didn't qualify, didn't dance around it. His answer was that digital assets are already part of the fabric of the U.S. financial services industry. Already, past tense. Not a future consideration, not a policy debate, a current reality being acknowledged by a man who may soon run the Federal Reserve. That framing matters enormously. It signals that the incoming leadership at the Fed is not hostile to crypto, not treating it as a threat, and not planning to work against it. That alone would have been enough for one day. But the hearing kept going. Senators moved to the topic of central bank digital currencies, CBDCs. This is the government-issued digital dollar concept that privacy advocates and crypto supporters have been fighting against for years. The concern is straightforward. If the government controls the digital currency, they control who can use it, when, and for what. It's the opposite of what crypto was built to be. So what does the potential next Fed chair think about it? Warsh was unambiguous. He said the Federal Reserve does not have the legal right to issue a CBDC. And then he went further. He said even if they could, it would be a bad policy decision. A senator asked him to put an exclamation mark on it. Would he, as Fed chair, prevent the Federal Reserve from moving toward a central bank digital currency? His answer was yes, to the extent it is within the power of the chair to stop it. Let's sit with that for a second, because this is huge. The man who may be running the Federal Reserve just told Congress under oath that a government digital dollar is both legally questionable and bad policy. That is the most direct anti-CBDC statement ever made by a prospective Fed chair. And what it means for the market is that stablecoin development stays exactly where it is right now, in the private sector. Companies like Circle, which issues USDC, just got a massive green light. The networks those stablecoins operate on, primarily Ethereum and Solana, benefit directly from that. Private stablecoin adoption is going to continue accelerating, and the government just confirmed it won't be competing with it. Now let's talk about interest rates, because this is where things got politically charged. President Trump appeared on CNBC today and made his position crystal clear. He likes Warsh. He thinks Warsh is the right person for the job. And in the same breath, he made it plain that he expects rates to come down. Trump has been vocal about this for a long time. He believes the U.S. should carry the lowest interest rates in the world, the way it did when he was younger. That's his benchmark. That's his goal. And now he's put a man in position to potentially make that happen. So senators asked Warsh directly, what did you and President Trump talk about when it comes to interest rates? Did you make any commitments? Did you tell him what you'd do? And Warsh handled it carefully, but clearly. He said Trump has made his own views on rates loudly and publicly. That's not a secret. But Warsh said he never told the president where he thought rates should go, never made a commitment, never even considered doing so. His broader philosophy is that too many Fed officials make the mistake of telegraphing rate decisions too far in advance. He thinks that's damaging. He wants a Federal Reserve that is humble, nimble, data-driven, and willing to have real internal debate before making calls, not one that shows up to meetings with a predetermined script. Here's the read that matters for Bitcoin and crypto. Warsh didn't say rates would drop, but he also didn't say they wouldn't. What he signaled is that he would respond to data, and the data right now, with tariff pressures, slowing growth signals, and a softening labor market, increasingly points toward cuts later this year. And rate cuts historically pour fuel on risk assets, crypto included. The market knows this. The 4 green weeks Bitcoin just put in are partly a reflection of that expectation being priced in. And then came the moment that genuinely stopped me. Separately from the Warsh hearing, in what appears to be a different congressional session today, a 4-star U.S. admiral was called to testify on national security matters. And Bitcoin came up, not as a joke, not as a curiosity. as a serious tool of American strategic power. A senator pointed out that China's central monetary think tank published research last year identifying Bitcoin as a strategic asset. This came after President Trump moved to establish a U.S. strategic Bitcoin reserve. The senator asked the admiral directly, how does American leadership in Bitcoin affect leverage, resilience, and deterrence against China in the Indo-Pacific? And does a strategic Bitcoin reserve help the U.S. compete? The admiral's response was measured but significant. He described Bitcoin as a serious computer science tool, the combination of cryptography, a blockchain, and a proof-of-work protocol. He said that proof of work imposes real-world costs beyond just securing a network. He called Bitcoin a peer-to-peer, zero-trust transfer of value. And he said, on the record in front of Congress, that anything supporting all instruments of national power for the United States of America is to the good. Read that again. A four-star admiral just told Congress that Bitcoin supports American national power. This is not retail hype. This is not a YouTuber with a price target. This is the U.S. military. In a formal hearing, making the case for Bitcoin as a geopolitical asset. China has a Bitcoin strategy. The U.S. military is now publicly acknowledging they need one too. The distributed energy consumption of the Bitcoin network, its hashing power, its resistance to censorship, these aren't just investment talking points anymore. They are national security talking points. And that is a fundamental shift in how this asset is being perceived at the highest levels of government. This is a core reason Bitcoin's price continues to push higher, even as macro uncertainty remains elevated. The bid isn't coming from retail. It's coming from entities that understand what Bitcoin actually is at an infrastructure level. Now let's look at the chart because the technicals deserve your attention right now. Bitcoin is closing out its fourth consecutive green week. That's a solid streak, and the momentum is real. But the structure overhead is something traders need to respect. We are sitting inside a bearish flag pattern, a setup where price consolidates in a rising channel after a strong move, before typically breaking downward and continuing the prior trend. Bearish flags don't always break down, but statistically, they do more often than not. What makes this one worth watching closely is the number of times price has tested the upper boundary of the flag. The last bearish flag we saw tested the top 3 times before collapsing. This current structure has tested that upper level 4 separate times. Each touch without a breakout adds pressure. Price could still push into the low 70s, even the high 70s or low 80s in the near term, and that would still be within the flag structure. But if we get a clean breakout above that upper boundary and hold it, that changes everything. That would be a technical signal that the bull run is still fully intact and has significant room to run. If it breaks down, the pattern confirms, and short-term traders should be prepared. Watch that level. It's the most important line on the chart right now. Over on Ethereum, there's a story that's generating a lot of debate in the community, and it's worth understanding clearly. A DeFi protocol called Kelp DAO was exploited. A hacker drained the protocol and moved over 30,000 ETH, worth approximately $71 million, onto Arbitrum, which is one of Ethereum's largest Layer 2 networks. What happened next is where the controversy starts. Arbitrum's Security Council voted to invoke emergency powers and freeze the hackers' funds, moving them into an intermediary wallet that can only be accessed through a formal governance vote. The crypto community split immediately. Critics are calling it decentralization theater, arguing that if a small group of people can freeze your assets at any time, the network was never truly decentralized to begin with. And that's a fair critique on its face. Supporters countered that Arbitrum has been transparent about this from the beginning. The network is in phase 1 of its development roadmap. Emergency security powers exist specifically for situations like this, and the plan to progressively decentralize over time has always been publicly documented. Both sides have a point. But here's the practical takeaway every investor should internalize. There is a clear hierarchy of decentralization in this space, and where an asset sits in that hierarchy matters. Bitcoin is at the top. No individual, company, or government can freeze a Bitcoin transaction on the mainnet. Ethereum mainnet sits in second place, highly decentralized, highly resistant to interference. Layer 2 networks like Arbitrum and most newer altcoins sit well below that line. They are faster and cheaper, but they carry meaningful centralization risk that most retail investors don't fully price in. This is exactly why when a hacker successfully exploits a protocol, the first move is always to bridge funds to mainnet as fast as possible, because mainnet is where the real decentralization lives. Once funds are on Ethereum mainnet, or better yet, converted to Bitcoin, the options for recovery dropped dramatically. Today was a day that reminded the market why the blue chips in this space command the premiums they do. Bitcoin and Ethereum aren't just the biggest by market cap, they're the biggest because they've earned the trust that comes from years of decentralized operation without a single point of failure. A potential Fed chair endorsed crypto and rejected CBDCs. A 4-star admiral called Bitcoin a national security asset in front of Congress. Bitcoin is 4 weeks green with a critical technical level approaching, and Ethereum just demonstrated exactly why decentralization matters at the base layer. This is not a slow news cycle. This is the infrastructure of the next financial system being built in real time. And today, it was being discussed in the halls of the US government. Make sure you're subscribed. Hit the notification bell, because the pace of this is only going to accelerate, and you don't want to be catching up after the fact. I'll see you in the next one.